Hey there, traders. What's up? Todd Gordon here. It's Fed Minutes Wednesday, and I want to update you on a trade that we put on here right after the Fed Minutes, which is a bond position. And we did it in the TLT. So to set the trade up, I want to start charting the underlying 30-year bond futures. It's, the TLT tracks 10 and 30, so, it's not going to be perfect, but very close. So the trade we're looking at here is the 30-year bond market. And we're looking to put on an option structure in wave 4. So just to give you the background here, here's wave 1, wave 2 is a nice A, B, C correction, wave 3 up, and now I think we're moving into wave 4. Now, second waves tend to be very kind of to the point. Clear A, B, C correction, really no fuss, no muss. Wave 4s tend to make you want to pull your hair out. Right, so wave 4s tend to do this and up and down and back and forth and drive you nuts. Then once everybody kind of gets fed up of the chop is when it breaks up to wave 5. Okay, so what we've done is put on an option position to take advantage of not only the chop for what we see to be about the next month, but also the limited upside that we have left in the bond market. So the trade we did was we put on an iron condor in the ETF. Okay, before I get into the ETF, let me give you a little bit more details about this trade. Now, there's two Fibonacci measurements we have here, 4 versus 2 and 4 versus 2 time. So we do 4v2 price, 4v2 time. What we're doing is comparing the prior corrective leg to the current corrective leg. Okay, so there's the prior, wave 2 is your first corrective leg, and wave 4 is your next corrective leg. So we're going to compare it not only in price, which is this way, but time, which is that way. Corrections will be related to each other. So what we can see is if they're going to be equal in price, it's right about the 135 level. If it's going to be 1.618 in terms of distance traveled in 4 compared to 2, it's down about 134.5. Okay, fine. Now, let's use that same kind of thought process with time. Wave 4, as I said, is usually a little bit more choppy and long and drawn out compared to wave 2. So we would expect wave 4 to last at least as long as wave 2 did, which is on this date right here. And more typically, it would go out to the 1.618 relationship of wave 2 versus 4. So real simply, if wave 2 took 10 days, we should expect wave 4 to last at least 10 days and probably 16.18 days. Use your fib levels. Okay, so what we did is did it in the TLT. So I'll bring this up and just overlay it. It's not going to be perfect, but we found that the lower Fibonacci support is right around, I'm looking over in the left scale, about 110. Okay, wave 4 should not get through this Fibonacci support, and this is also an old broken trend line that's now serving as support. So 110 is the floor. Okay, and when should it happen? Wave 4 really shouldn't complete before June 3rd, and it ideally should complete around June 12th. Okay, that's the typical wave 4 time distance, so it'd be way out like this. Now, once wave 4 is over, we're going to move higher up in wave 5. Wave 5 really shouldn't move much above the 261% fib ratio here, which is 140. So we have price floor, we have time targets, and we also have an upper price ceiling. So we have a pretty good idea of where this market should go. Here's TLT. Looking over here, Fibonacci support is about 110. We shouldn't get below that. Looking up here, resistance really shouldn't get above 116, 117 in the TLT. So here's the trade that I put on at the close. Where's my platform? View trades. Okay. So the trade I did was I sold the 110s, 110 puts on the downside because that's support. I bought the 109s to cap the risk. And at the same time, I sold the 116s up here, the calls, and bought the 117s, creating the iron condor. Okay, these expire in 30 days. And what this thing says, what the strategy says is we should be chopping away for all the way out till June 13th, very close to the expiration of these options, so I can collect full premium. So even if this thing goes straight sideways, I collect premium. Even if this thing pulls down to wave 4, holds support, then begins to move higher up in wave 5, chances are it's not going to happen by the end of expiration. So we have a pretty good opportunity to collect full premium on this. I think the credit was, I don't know, 25, 30 cents or something like that. So looking pretty good. And also, guys, it corresponds extremely well to the +1 and -1 standard deviation levels, where you would very often structure selling premium like this. Selling credit spreads or selling iron condors like that. So it's fortified with the Elliott Wave structure. So I think we're going into wave 4, sideways consolidation in the bonds for a while. No serious economic data coming up. Good opportunity to sell premium. We sold it on the downside, plus we sold it on the upside, which would be the cap, I think, around 117 in TLT for wave 5. All right, good luck, guys. Hope that helps. Hope it made sense. Pretty advanced, I know. But we're going to be doing a lot more of this stuff, so be on the lookout. We are launching a new service focused on advanced Elliott Wave option trading strategies and stocks, ETFs, stock indexes, and markets like that. All right, so good luck, guys, and I'll talk to you soon.